everyone, my name is Haitul Akma and I will be your moderator for today. In today's forum, we will be discussing about tax audit activity in Malaysia. But before we begin, allow me to introduce our panels for today. Panel number 1, would you like to introduce yourself?
Hello everyone, my name is Nurul Adila Izzati binti Anwar and you can call me Adila.
Thank you, Miss Adila. Next, panel number 2, would you like to introduce yourself?
Hi everyone, my name is Nur Nazira Husna binti Azman. You can call me Husna.
Thank you, Miss Husna. Next, panel number 3.
Hello everyone, my name is No Farahani binti Shaimi and you can call me Farah.
And last but not least, the only gentleman for today, panel number 4, please introduce yourself.
Hi, my name is Ahmad Harid bin Ahmad Zakaria. Can call me Harid.
Thank you, and it's very nice to meet all of you. So, what is tax audit? Tax audit is an examination of a taxpayer's business records and financial affairs to ascertain the right amount of income should be declared and the right amount of tax should be calculated and paid are accordance with tax laws and regulations. There are two types of audit, which are desk audit and field audit. Desk audit is held at IRBM's office, and it generally involves issues or adjustments of incomes and taxes that can be resolved by correspondence, and it may also be referred for a field audit. So, what is field audit? Field audit usually takes place at the taxpayer's premise. It involves the examinations of a taxpayer's business record or sole proprietorship or partnership business. If business records are incomplete, it may involve the examination of non-business records. And for field audit, there are 14 days notice prior to a field audit. There are three types of field audit, which are general compliance audit, issue-based audit, and special audit. The main objective for tax audit is to encourage voluntary compliance with tax laws and regulations, and to ensure a higher tax compliance is achieved under self-assessment system. Audit officer is required to ensure that the correct amount of income has been reported and paid in accordance with the tax laws and regulations. Next, we will have Ms. Adila and Ms. Husna to tell us about audit process. The floor is yours.
Thank you, Ms. Moderator. First of all, I would like to explain what is audit process. The audit process is the series of steps followed by an auditor in order to conduct an audit engagement with a client. There are 6 audit process, but I will explain 4 of it and the rest will be explained by panel 2, which is Ms. Husna. Okay, for the first audit process is audit venue. As mentioned earlier by Ms. Hayat, we have 2 types of audit, which is desk audit and field audit. For desk audit, it will be held at IRBM office, while field audit mostly will be held at the business premise. If the business premise are not suitable alternative may be suggested. Next, audit commencement. Surat memohon dokumen dan maklumat, which is also known as request for documents and information letter, will be issued by official email or fax to the taxpayer. Taxpayers are required to provide feedback within 14 days from the date of the letter. If failed to do so, it will cause the audit action to resume using appropriate method. For desk audit, request for documents and information letter will not be issued but will be notified of any adjustment by notice of assessment. Field audit, surat pemberitahuan lawatan pematuhan will be issued at least 14 calendar days prior to the date of visit. Taxpayer can postpone the date of audit visit on reasonable grounds. The third process is the visit. Audit action is only applicable to field visit and normally starts with an interview to obtain an overview of the business. Taxpayers will be interviewed, including the person responsible for handling business record. Another audit process that I will explain is examination of record. For your information, audit officers will be allowed to examine all business record and inspect the stock for verification. But records pertaining the year assessment, which already time-barred, will not be examined. Sometimes other than business record also may need to be examined in certain circumstances. So here you can see the types of record, which is business record and other than business record. For business record, it is all records relating to the business, while other than business record is statements of personal bank account, purchase of properties, taxpayers' personal expenses, and other statements as may be required under Section 79 of ITA. In this process, audit officers will not search or take possession of any records, and if it deemed necessary, audit officers should be allowed to make copies of relevant documents. If the workplace provided by taxpayer is not suitable to carry out audit, audit officers may obtain records for examination at the IRBM office with consent of the taxpayers. Documents and records to be taken back will be listed, can be checked and made copy if necessary. Records and books of account kept in electronic form, but hard copies still should be made available for examination. Well, I think that's all from me, so I would like to pass to panel 2 to explain the rest of audit process.
Thank you to panel 1 and moderator. Without further ado, I will continue with another 2 steps of the audit process. The fifth step is audit time frame. It's only applicable to field audits. The time required to complete an on-site examination of records is 1 to 3 days. However, it may be extended depending on these factors, which is the size of the business and the complexity of the business transaction. If the business is big and is too complicated to settle it, the audit time frame can be extended. In addition, the form in which records are kept or the extent of cooperation from the taxpayer can be the factor of audit time frame may be extended. Next is sixth step, which is settlements of audit. After concluding the audit work, the audit officer will prepare an audit finding report for approval by the branch audit manager. Taxpayer is required to be present at the IRBM's office for discussion on the proposed tax adjustments. The audit officer, together with at least one senior audit officer, shall discuss the proposed adjustment with the taxpayer. The taxpayer will be informed of the audit findings, which will cover audit issues raised, reasons and rationale for raising the audit issues, and the amount of proposed tax adjustment and the year assessment involved. If there are tax adjustments to be made, a notification with details and rationale of proposed adjustment will be issued. If taxpayer disagrees with the adjustment, he is allowed to file an official objection 18 days from the date of notification. If no objection is made, the taxpayer shall be deemed to have agreed. A notice of additional assessment with appropriate penalty or a notification of non-chargeability to tax will be issued. However, if there is no adjustment, a letter will be issued to inform the audit has been finalized. The time frame for settlement should be 90 calendar days from the commencement of the audit. Once the audit case is settled, it should not be repeated on the same issues for the same year assessment. That's all from me. Thank you.
Thank you to Ms. Adila and Ms. Husna. Now that we have known about the process of tax audit, Ms. Farah, can you tell us about the selection criteria for tax audit?
Thank you, Ms. Moderator. So I'm going to explain about the tax audit selection criteria. Basically, this part is about which company will be selected for tax audit. So first criteria is location. Company located in major cities such as KL, Penang, JB, Melaka will be selected for the tax audit relatively higher than other cities, which means the percentage for the tax audits for company in major city, usually company in the state capital, is higher than other city. This is because the number of listed company and economic activity are well established in major city. Specific industry. So what is specific industry? Specific industry is specialized industries such as property developer, contractor, medical practitioner, taxi operator, pump exploitation, telecommunication, IT are selected for tax audit. So why this company are selected for tax audit? This is because this industry has dynamic development, vulnerable and have many unresolved and contentious issues. So we move to the third criteria, contentious tax development. The hotly debated contentious tax issues such as transfer pricing, withholding tax, interest restriction, reinvestment allowance, and Section 4 Sub-A rental income may be prioritized for tax audit as judgmental interpretation are involved between taxpayer, IRB, and the courts. Fourth selection criteria is third-party information. IRB will embark on tax audit on another taxpayer if there is reasonable suspicion that such a taxpayer may have under-reporting business. For the fifth criteria is risk analysis. IRB compiles statistic on industry average on turnover and gross profit for all industry with the help of information technologies. Risk analysis will then be carried out to select companies that have wide discrepancy with this average. For the last criteria, taxpayer previous record of return. Taxpayer who have the habit of late submission of return or non-submission of return will have a higher risk of being selected for tax audit. So that's all from me. I'll pass to Ms. Moderator. Thank you.
Thank you, Ms. Farah. Mr. Harik, what are the rights and responsibilities for audit officers, taxpayers, and tax agents?
Okay, thank you, Ms. Moderator. I will explain about right and responsibilities for an audit officer first. First one, audit officer must be professional, well-mannered, trustworthy, honest, and maintain integrity. This includes conducting yourself in a manner that instills trust and confidence in your work. Second, audit officer always be ready to provide explanation on the objective of tax audit, the right and responsibilities of taxpayer. An audit officer must ensure that taxpayers understand that their right and responsibilities to facilitate them to do their obligation. For the don't, first one, audit officer cannot have any personal or financial interest in the business of a taxpayer being audited. This includes refraining from holding any stake, direct or indirect, in the businesses of a taxpayer under audit. Second, audit officer cannot abuse his position or power in carrying out his duties as provided under Section 118 of the ITA, such as using them for personal gain or leveraging them inappropriately is strictly prohibited. Next, the right and responsibilities for taxpayer. First one, taxpayer must be cooperative, well-mannered, fair, honest, and with integrity. This involves providing information and assistance willingly, being fair in all dealings, and maintaining honest attitude and integrity throughout the audit process. Second, taxpayer must provide reasonable facilities and assistance to enable the audit officer to carry on his duties. This may include providing access to relevant document, information, and any other resources necessary for the audit. Creating an environment conducive to the audit process helps ensure accuracy and efficiency. For the don'ts, first one, taxpayers cannot obstruct the audit officer in the exercise of his functions. Obstruction can include withholding information, refusing access to document, or any action that delay the audit process. Cooperation is essential for the timely and accurate completion of the audit. Second, taxpayer cannot make any form of payment to the audit officer. Financial transaction between the taxpayer and the audit officer can compromise the integrity of the audit and may be considered illegal. Next, the right and responsibilities for tax agent. First one, tax agent must be professional, be fully conversant with the tax laws and practice and with the integrity. This involves staying updated on relevant regulation and demonstrating competence in providing accurate tax advice. Second, tax agent must refrain from misusing information acquired or abusing his position as a tax agent for his own personal advantage. For the don'ts, tax agent should never provide incorrect advice to taxpayers, as this can lead to legal and financial consequences, and collaborating with taxpayers to avoid paying the correct amount of taxes. Second, tax agent cannot delay the work of tax audit or acting irresponsibly towards his entrust duties. Okay, that's all from me.
Thank you, Mr. Harit. And last but not least, Ms. Farah, do tell us about the assessment and penalties for tax audit.
So I'm going to explain for the last part, which is assessment and penalty. For assessment, understatement of tax under section 113 sub 2 or paragraph 44B sub 6 sub B of the ITA, the penalty rate equal to the amount of tax undercharged 100% accordingly. However, the DGIR is exercising his discretionary power may consider a lower penalty of 45% to be imposed for first offence. For provision of reasonable facilities and assistance, Section 18 and 18 sub 1A, the taxpayer is obligated to provide reasonable facilities and assistance to IRBM personnel when they carry out the field audit in the premise of taxpayer. So for the penalty, a fine of 1,000 ringgit to 10,000 ringgit, imprisonment for up to 1 year or both. For the last assessment, keeping of record, section 82 sub 1 sub A, every taxpayer carry on a business shall keep and retain in safe custody sufficient record for as long as 7 years from the end of the year to which the business income or adjusted loss. For the penalty, a fine of 300 ringgit to 10,000 ringgit. Imprisonment for up for 1 year or also both. So that's from me.
Thank you to all of the panels. Now, we have learned about tax audit in full details. May this forum become helpful for all of us in the future. Thank you. Goodbye.